Welcome back. You're still tuned into Trading Hour. The market is moving up a little bit right now, so it's around 25 points higher on the Nifty. You have all of your key indices which are now in the green, but the strength today is definitely in the mid-cap space, which is up over 200 points. But we do have some earnings coming through, so let's focus on the realty space. Puravankara has come out with a good operational update. The company saw healthy volume growth led by the affordable housing segment in Q1. Abhishek Kapoor, who's CEO of Puravankara, joins us now to discuss the latest earnings as well as the outlook going forward. Mr. Kapoor, good morning. Thanks a lot for joining us. This is Pavitra. So like I pointed out, the growth has come from the affordable housing segment, but just the Puravankara segment has seen some decline. It's the same thing that we saw last quarter as well. So can you tell us what's going on over here and what is the outlook that you expect?
Good morning, Pavitra, and thank you for having me on the show. You're right. The trend is the same like the previous quarter, and the question is perfect. So in Puravankara, essentially, we have been kind of running out of inventory, and the new launches are critical for the growth of the numbers. And that is where the difference is between the Provident numbers and Puravankara numbers. But if you look at a little closely in terms of the numbers and the performance of the existing inventory, we have seen more velocity compared to the previous quarters and the last year. So velocity on the existing projects have gone up, but because we have not launched any new project under Puravankara brand is why you're seeing this difference, wherein we have actually launched projects under the Provident brand. So that's the only difference, but I think you can expect this to change during the year as we plan to launch about 6 million square foot in Puravankara this year, 6 million in Provident, and about 4 million in plotted development. I think the 6 million of Puravankara that we launch will add significant value during the course of the year. So you can anticipate and expect that these numbers will change over the next 3 quarters.
Okay. Hi, Abhishek. Morning. The thing which we are hearing in Bombay is that, supply is sort of just being taken up, right? And there is more demand than perhaps what is supply in the market, maybe because it's pent up. So therefore, I wanted to understand why realization has been flat for you.
Hi, Sumera. So realization is really a mix of inventory that you sell. So it is not necessarily reflective of the price appreciation that you typically see. So if you look at it a little more granularly, project-wise, you will see there has been a price appreciation. But if you look at average out, the price would look, that's a simple number because it comes out with the average of the quantum you sold in different types of inventory. So that's the reason why it looks flat. But overall, there has been price increase to the extent of between 6 and 8%.
You said your launch pipeline is 6 in Puravankara, 6 million square feet in Provident, and 4 million in the plotted land, right?
Yes.
Okay, so total of 16 million, which should 16 million square feet, which should come on stream this year by the end of FY23.
Yes, okay. Definitely it should come by the end of this year. So we're pretty much on track. Really focused on the new launches because that will really unlock all the equity that is today invested in these lands.
Okay, and what is the unsold inventory right now for Provident as well as Puravankara?
So total we have about 5 million square foot as of today, which is available for sale. And typically we have been doing in the past about 3 million odd square foot a year, 3.5 million square foot. For example, last year was about 3.4 million square foot. And obviously with the new launches, you would expect this number to go up.
And this 5 million square feet, can you break it up in terms of Provident and Puravankara?
Sure. So, for example, typically in terms of square footage, Provident, because there was a lot of focus on Provident, while the value of Puravankara is higher. In terms of numbers, it has been kind of 60-65% in Provident, about 35% in Puravankara. Having said that, in value, it is pretty much balanced. So this year, that will slightly change. In fact, we expect that Puravankara should be able to do more value because the fact that we are launching about 6 million square foot in Puravankara at a higher value relative to Provident.
But where are you seeing more inquiries? Is it in Puravankara or Provident?
Look, really speaking, I think this is across the board. This is after a long time. I think the pent-up demand, that was mentioned earlier in the conversation, has come back, and it's come back across the board. So we are seeing traction in affordable housing. We are seeing traction in luxury space as well. So this is just across the board, fortunately, as of now.
Okay. You were also talking about this 16 million square feet that you have that will come on stream in this coming year. So can you take us through what is the kind of capex that you will put into this? Your debt is currently at around 1850 crores. Where will that also be by the end of this year once all of these projects do come on stream?
So on the debt piece, look, see, these lands are all paid for. What are we really spending on? We're really spending on the launch and pre-launch expenses, which is largely around getting sanctions approvals and design and and then the sales, marketing, and the launch piece. So it's not really significant. So we intend to keep the debt levels at a similar number. What happens is the debt gets churned because there is a whole lot of debt that is getting also repaid from the cash flows of the project. At the same time, debt may get added because we are also spending a lot of money on these launches. So we'll possibly keep it at the similar level. But if you look at it on a per square foot basis, the debt will look lesser and lesser as we go along. And I think that should be the context. Cash flow and sales number along with per square foot debt should be the parameter we should look at least in the real estate piece. So we expect that definitely to continue to improve.
Are you adding new cities? Are you looking to add new geographies?
South and West continues to be our focus. We want to go deeper in Bangalore, Chennai, Mumbai, Pune, and Hyderabad. Of course, we have other markets where we have traditionally done business in, for example, in Kochi, Coimbatore, Goa, and of course, Mangalore. But having said that, I think the prime focus really is Bangalore, Chennai, Mumbai, and Pune. While we will see also launches in other markets because we already have some land banks there, and which is the focus. We have over 50 million square foot of land bank, which we really want to focus on and monetize at the fastest pace possible.
You said the newer launches are coming in at higher pricing. So what would your realizations look like, say 18 months down the line, once your new inventory is up on stream and you manage to sell it as well? So currently realizations are about 7,400, 450, 7,450. What can it inch up to?
So, again, let me just put it in context. When you say realization will go up, I don't think that realization will significantly change during the course of the year. The volumes will change significantly during the course of the year because when I was talking about realization, I was talking about realization between Provident and Puravankara. Typically, there is about a 15-20% difference between realizations of Provident and Puravankara, because of which, while a 6 million square foot of sales number will look very different for Puravankara versus the Provident. So that was the context in which I was mentioning, but I don't see any significant change or movement in the realization per se during the course of the year, because most of these projects that we are launching are in a similar bracket. For example, they are in Bangalore, they are in Kochi, they are in Mumbai, Pune, in Chennai. So those price points are at similar levels. So while we may see project to project appreciation as the project progresses, you may not see overall average realizations changing significantly. Maybe marginally it will appreciate further as we go along.
Okay, Abhishek, we'll leave it at that. Thank you very much for joining in. That's the work from Puravankara. Get into a break. Up next, we'll discuss the market technicals, which